Welcome, everyone. Today we are welcoming a guest, Jake Salemi with Epic Mortgage, going over offer strategies. And I think that Jake's presentation should only be about, 20, 25 minutes, right, Jake?
That's correct.
And we can absolutely ask any questions we want during his presentation. I'll probably make some comments as well. And then we'll open it up for just more discussion afterwards. But please feel free to ask questions at any time. And of both of us too. This is, kind of just tag teaming this as well. So, but with that, then Jake, I'll let you go ahead and let me share my screen with you or make you
I
the
think
host.
I have, yeah, there we go.
Are you able to share your screen
It
from?
says share screen. Let's see if this will stop sharing other screens. Yes.
Another thing would be great to do after the Jake's presentation is just to see if any of you how you guys have been in competition, how you have been prevailing, just kind of bouncing ideas off of one another as well of what's worked in the past month or so. So, but again, there'll be plenty of time for all of this after Jake is through. So go ahead, Jake.
Awesome. Well, I kind of put together this PowerPoint last year. I did a lunch and learn for writing strong offers with finance contingency. I know it's a difficult market. It hasn't really changed much from last year for buyers, where it's very challenging. Obviously, we're in a housing crisis. There's not enough homes for buyers out there, so that leads to some stiff competition. So there's just a couple things and some, you know, ideas strategies that maybe we can implement to at least get our offers thought of more thoroughly or more considered. I'm going to kind of click through. I'll take my time, but if you guys have questions, just raise your hand and I'll kind of stop as needed, and we can go from there. So I think the first part is like you want to make your offer stand out to the listing agent, to whomever. So one of the first things I value or find important is try to work with a local lender that actively participates in the offer process. So I'm going to get into this a lot in greater detail as we continue, but we want somebody, you want to work with somebody that works weekends. You want to have somebody that doesn't just issue a blanket pre-approval letter. You want somebody that's going to issue a pre-approval letter for each specific property, as I think that stands out. That listing agent knows that, they've looked through that specific property, the taxes, their down payment, everything on that home to make sure it works for that house specifically. The other thing you can do is you can adjust terms of your contract and then create benefits for your seller. So those are kind of the three talking points, and I'm going to go into each one a little more detail here. So how can your lender participate in your offer to purchase? Well, first and foremost, the pre-approval process. So not all pre-approvals are created equal. It's important to have a pre-approval. You can do different things to strengthen it. Like you can get what's called a to be determined pre-approval, where they basically pre-underwrite the documents. So they'll underwrite the income and the assets. At this point in time, you just pretty much have to plug and play an appraisal if you don't get a waiver. And this can really help strengthen the offer because every time I submit an offer for one of my buyers, I always call the listing agent, let them know what I've done, what I've verified from that buyer, how easy and smooth the transaction is going to be because of what I've done on the front end with the pre-approval process to make sure that, no, there's going to be no snags with their income. It's already calculated and underwriters reviewed it. We've already verified all the assets that they have for down payment. So we know, what they can do if there's a gap for in an appraisal gap or something like that, what they can handle there. Um, and then once we get the offer submitted or once we get it accepted, I do weekly updates every Tuesday until the transaction closes, and we keep both sides of the transaction informed. So both the listing agent and the buyer's agent get emails. We blind CC the listing agent so that they don't have the contact information of any of the sellers or anything like that, but it gives them an idea of where we are in the process. If we've gotten the appraisal back, where we stand, if we're submitting for clear to close, maybe if we're waiting on like HOI or something like that, homeowners insurance, just kind of where we stand in the process so that everybody's kept in the loop throughout the entire process. speaking of the pre-approval process, we always verify income. There's some difficult things with income, particularly when it comes to bonuses, overtime, or commissioned income. We always have to kind of break that down and get a 2 year history of any of those things because an underwriter is going to want to verify how that's looked for the past 2 years to ensure that they have continuation in the future of that. So, verifying income, employment, and assets for available for down payment is one of the most important parts. We like to make sure that once we've got credit pulled, we've got all their documents, that we've ran the income, and every lender does this. This is not specific to Epic, but we lenders run it through what's called an automated underwriting system. And what that does is it gives us a path towards getting the loan closed. So we know exactly when we get an approve eligible in our automated underwriting system, what we have to get from the borrowers in order to get the clear to close, in order to close on the loan. It lays out a path and a roadmap for us to get there. So once we've kind of got that, we can preemptively, especially if it's a quick close, kind of start working on asking or to letting them know what we need from them so that the process is smooth. And then we just want to make sure that we're reviewing all the documents and our automated underwriting system findings to prevent any issues once the offer is accepted. As I said before, I like to call the listing agent, explain how strong the pre-approval is. Sometimes, I mean, I've actually gotten offers accepted by calling listing agents. I think it's more common now than it was probably a year or two ago, and that's good. It's good that people are advocating for their buyers and participating in the process. Obviously, you know, realtors, you guys work a lot on the weekends, right? That's when the bulk of things happen on Saturdays and Sundays. And there's a lot of great lenders out there. I have friends that work at Bank of England. I have friends that work at Cream City. So there's a lot of wonderful lenders. I guess I would just caution you if you've got somebody that's like working with Rocket Mortgage or an online one, try to push them towards somebody local just because you want to be able to work through the process with your lender and make sure that they have a firm understanding that they can, especially if you've got a strong buyer who's putting 20% down, if you get an appraisal waiver, that's really going to strengthen your offer. So if you have somebody that's, you know, not working weekends or not picking up the phone or not running each offer through the system to make sure if you're getting an appraisal waiver or anything like that, um, you know, make sure that you try to push them and explain to the customer why it's valuable to work with a local lender that does do those things for you. So every time I call the listing agent, I explain how strong the pre-approval is. A lot of times I'll TBD underwrite my files. So what I've verified, what the underwriters verified, employment, income history, all of that. I let the agent know that it's going to be a smooth process, that we'll keep them informed throughout the entire process with our weekly updates. And obviously, you know, nights, weekends, calls, that's when the vast majority of work gets done. So we have to, you know, be available and be ready to help in those situations. Do you guys have, I guess, to start, like any questions with how the lender can help you through the process right now?
I would just love to speak to an experience I just had over the weekend, and it was with a different lender, Jake, so I apologize, but you were working with another buyer of mine on Saturday morning. But yeah, another local lender working in obviously in competition, and just being able to call and talk real time with them on Saturday morning was key. He worked with me for a few hours, trying to get the appraisal waiver, right? So just being able to get in touch with your lenders in real time. And then also being able to say to the listing agent, I'm working with a local lender. She was able to call him then Saturday afternoon and speak to exactly what Jake was just talking about, like verify that everything was on the up and up, that the appraisal waiver was legitimate, speak on the buyer's behalf. So it's just all these things matter when writing a competition for sure. Um, there's
Also seemed like if you, I had an instance where I had to save a deal for somebody in the Lake Country office. It's a realtor I work a lot with, and there was a couple. He was retiring from the military, joining a private sector job in Heartland, and they had a lender out of Florida. And sometimes when you're using national lenders, they don't have relationships with local appraisers, and it can cause a problem as well that we don't even think about because they might be sending appraisers up from Chicago or somewhere like that where they don't know the local I guess housing economy or anything like that, as
Mhm.
well as local appraisers. When you're working with, Epic or a local lender, a local bank, whomever, they have a pool of appraisers that they approve. We can't obviously choose who the appraiser is that goes out and looks at the house, but we can take bad appraisers off our lists or learn from that, and we can add good ones. And we are, a lot of, not just us, every local institution is using local appraisers. So we had an instance here where the appraiser, they sent somebody up from Chicago. It came up short. It was a VA loan. And it was just, it was a rush to get it fixed. VA appraisers stay with it. So we had to fight it, get the appraisal transferred. So that's another value add to working with a local lender that you don't always even consider. It's just the local relationships that they have as well with local appraisers and stuff like that that really know the market well.
Awesome. And also I want to speak here, and just remind you guys, use examples of seasoned agents when we're sharing these things, when you're having your buyer consultations, that even if you don't have your own personal example of how a lender can help, share these other examples, and why you want to encourage your buyers to use local lenders, when you are at that first buyer consultation stage and asking them who they're working with, et cetera. And why it's important to use a local lender.
Annie,
So,
did you have a question?
Yeah, I did. Thank you. What did you call it on the pre-approval where they've already checked income and
Sure. So what we'll do, we call that a TBD underwrite or a to be determined, where they'll pre-underwrite like the income, assets. So what they can underwrite basically everything in the file except for obviously the home address because we don't have an accepted offer yet.
and is that across like different lenders? Do they
I
have a
can't speak
term for
to what
that?
other lenders. I used to work at A Plus before Brad and Sean started Epic Mortgage, so I know A Plus would do TBD underwrites as well. I know it's not an uncommon thing. It's a little more work for the lender, so some people don't always advertise it or do it, but it does make for a stronger offer.
Got it.
It's not.
The
I
term
do a
is
lot of
the term
TBD
is
underwrite.
TBD.
Yep, to
Okay.
be determined underwrite. Yep,
Okay. Thank you.
and what's to be determined is the address.
cool.
Awesome. Any other questions, guys? I should say ladies. I think it's only ladies on here. Awesome. Well, the next thing kind of speaks to what we kind of include in our weekly updates email. So every week we have the closing date of when the transaction is going to be done. We give updates to the appraisal. So like when it's scheduled. It's crazy though. I've had instances where usually the agents know about appraisals more than I do because they're reaching out to them to schedule it. But then obviously closing time and location, where the loan is currently in the process, just to try to keep everybody informed, let them know where we're going at, and what we need still. Okay, so part two, I guess we're moving beyond lending, how we can kind of make our offers stand out or be more attractive. So we can adjust contract terms. So I know Steph and I kind of touched on this a little bit, but we can get an appraisal waiver through our AUS findings. AUS stands for Automated Underwriting System. Just so you guys know, if you ever ask your lender, we would never be able to get an appraisal waiver if they're not putting at least 20% down. The system will never allow for that to happen without at least 20%. But there's different ways, and more experienced lenders sometimes can get appraisal waivers that others might not, because sometimes you can put like, let's say the homes, we know we have an appraisal waiver at 250. I just got this last weekend, 250, but we got an appraisal waiver up to 258 because they're putting 20% down at 258 and we just put the appraised value at 250 and they still have that 20%. So if you've got a wise, smart loan officer, sometimes you can play around with the system. There's obviously, I don't know if you know this, there's two parts of lending. There's Fannie Mae and Freddie Mac. Those are the two sides of government mortgages. So sometimes you might get an appraisal waiver on Freddie Mac and you won't get one on Fannie Mae. So you kind of have to play around with both systems. Some are more forgiving than others. Typically, I know I get a lot of questions from realtors like, what do you see a pattern for homes that don't get appraisal waivers? I will say more often than not, when a home's been titled in the same name or hasn't had the sales history or more recent sales, it's less common to get an appraisal waiver. Oftentimes that's just because they don't have the history on title. They don't know if there's been improvements. They just don't know as much about the house. There isn't as much of public records on a home that's been owned for 30 or 40 years as one that's kind of hopped around 3 or 4 times in the past 20 years. So I know that's a common question. Another thing you can do is you can offer like a shorter appraisal contingency. Um, especially now when the market isn't that busy, we don't even have to typically pay for a rush appraisal. A rush appraisal is like $100 to $150 more. Typically, we can get that back in 7 to 10 days. Um, but if you're giving quicker contingencies, sometimes that can make that listing agent more comfortable knowing, okay, we're going to know where this deal stands in short order and in quick fashion. So we'll know, they're more confident maybe if there is an appraisal waiver or something like that, if you have the quicker contingency. I mean, I've done those in as little as 10 days, um, when you have a strong buyer, even if you don't have an appraisal contingency, especially if they're putting 30 or 40% down, obviously this is buyer's discretion, but you can waive that appraisal contingency altogether. And just, I would explain then to the listing agent if I had a buyer doing that, hey, Susie Q, she's really strong buyer. She's putting a significant portion down. We weren't able to get an appraisal waiver. Maybe it's a home that's been titled in the same house, the same family for 30, 40 years, but they are going to, they're waiving that contingency. We just have to get an appraisal in there for finance. And that can be, a strong thing. Obviously the buyer has to agree to that. You could offer gap coverage in the appraisal. That can go a long way as well to kind of get them to accept an appraisal. There is protections as well with the appraisal, obviously with finance contingency is still in there. But listing agents have gotten crafty when you waive an appraisal contingency, knowing that the finance contingency still kind of protects the buyer. So oftentimes they'll still ask like, hey, I know you waived the appraisal, but is there portion or a limit to them where they'd feel comfortable? And sometimes explaining that or providing that appraisal gap can help provide more clarity or more comfort to that listing agent. Continued adjusting contract terms. You can waive an inspection contingency. I know it's hard to advise a client to do that. I would never advise a client to do that. But if they really love a house and they've walked it with, somebody they trust, I know I've had a lot of buyers that walk it with maybe a dad who's in the trades or, a friend who's a builder or something like that when they go visit a house so that they feel more comfortable waiving an inspection. That's something that you can kind of get to get your offer looked at a little quicker. Offer a quick finance contingency. I know we can offer loan commitment in as little as 10 to 14 days. We can even offer a quick close in as little as 14 days too. As the season gets busier, that kind of bumps up to about 21. But trying to find that pain point of that listing agent and what they want. Sometimes maybe they don't want a quick close, right? Maybe they want post occupancy or something like that to make your offer more attractive. Trying to find that pain point for that seller is a great way to determine how you can kind of get your terms more accommodating to them and more acceptable. And if you have, a parent with money or that can show money, you can obviously waive the finance contingency, but still finance a loan. That's obviously you have to provide availability of cash. I do have some buyers right now that are in that boat where the parents have a substantial line of credit, like $1 million. So every time they write as a cash offer with the intention of financing the entire thing, knowing that obviously they can pay cash if something happens or something doesn't go through.
I have a quick question on that.
Yeah.
So can you talk a little bit about if we put in the offer, they're waiving the finance contingency, but then, they end up wanting to finance the loan, assuming you still have to go through the normal process that any other buyer would have to follow that needs to get a loan, including the appraisal, right?
I mean, you might have it depends. Each situation's a little different. Maybe you wouldn't have, can you guys hear me? I felt like I was breaking up for a second. I would in that instance, if I was working, especially if I was working with an agent I know well, I would say like, hey, we have a cash offer, we're waiving all contingencies, but we still want to seek financing on the loan. Sometimes agents will question like, well, why can't they just do the loan afterwards? There's a reason for that. Banks and Fannie Mae, Freddie Mac, they give better rates on a purchase transaction as opposed to a refinance. So there is a benefit to a buyer using that purchase transaction to finance their loan, especially now with higher rates, because obviously, you want to get the best rate possible for your buyers. So, when you see rates advertised or stuff like that for purchases, that's usually the best price. When you do it, if you wait until you close, they would technically be what's called a cash out refinance, and rates aren't as good as they are on a purchase. So that's why they kind of want to go coincided. I would call that listing agent, Kimberly, and I would say like, hey, they're cash offers. We verified their assets. They're waiving all contingencies, but they do plan on taking out a loan still for this property, just so that they're aware. And most people, once you explain it to it, they're okay with it
Like
completely.
that doesn't, a listing agent wouldn't say, well, now you have to come in and get an appraisal. I guess if I knew that you were getting financing,
I'd like to
is that
input.
too much?
Well, I want to interject here and just remind us all that in the offer to purchase, it does allow for a lender or for a buyer to get a loan, even if they
Mhm.
write cash. And there is a provision there for the seller that if the buyer chooses to get a loan, that they must allow the appraiser in, but they're not offered the protection of the appraisal contingency, unless of course they put that in there. So, I mean, it's all kind of spelled out for everybody on both sides, to protect both sides, to allow for it, so.
I think it's just a matter of getting them to understand, like, hey, we're going to close. If it's a 3-week close, we're going to close in 3 weeks. This doesn't impact anything. Everything's been waived. So, if there's some reason financing doesn't fall through, there is cash there for the deal. That's the purpose of writing as a cash offer.
Mhm.
So I think once you explain it to them and get them to understand why they're doing it that way, I think most people are accommodating and understanding to it. And then benefits for the seller, creating benefits for the seller. So again, finding that pain point, right? If it's post-close occupancy, if it's a quick close, I know I've had an incident recently. They wanted to close as quickly as possible because there was a couple getting divorced and they just wanted to, have that separation and kind of be through with it. So, we can close it as little as 21 days. You can make escrow non-refundable. A lot of these things I've seen, a buyer can offer to pick up a portion of the seller's commissions or the realtor's commissions to make their offer more attractive. Or I've seen buyers offer to pay both sides of closing costs, little things to kind of make their offer stand out. I mean, we had one we were negotiating back and forth like a month ago, and it literally came down to the buyer said, well, I'll just pay for this whole year's taxes. You don't have to prorate any of 2024's taxes. And the seller was really excited about that. And it only cost the buyer like $530. It was something very little to kind of separate themselves, make themselves more standoutish. Have you guys, I guess this is a point where I kind of like to ask people, especially, you guys obviously deal listing and buying side. Have you seen anything on offers lately or come across anything that really stood out to you as, oh, I like that idea, or this was a great thing?
I prevailed once because it was an estate situation. The home was still filled with parents' belongings. And so we communicated to the seller, to the estate, take what you want and we will handle clearing the contents of the house afterward. And that helped the seller immensely, the estate, the children immensely. So that was one kind of creative thing that we did. So, any other ideas, you guys?
I must have thought of them all. How awesome.
Annie, you don't have anything?
No, I mean, it's just the general stuff that we've been doing. I mean, I've done what you did, Steph. I mean, I've gotten offers for that. It's really, it's talking to that listing agent and finding out what the pain point is for the seller. And as much as possible, alleviating that pain point.
1000%. And
Yeah,
that's,
I mean,
oh, go ahead, Jake.
go ahead, Steph.
Well, I was just gonna say, I mean, we talk about an accelerator a lot, about building rapport with the listing agent, and this is the exact reason why we call listing agents ahead of time. Like, how can I make this attractive to your seller as possible? Asking all of these questions, and just also just demonstrating that you are a good communicator, and that they're gonna have direct line of communication with you. I mean, that should be obvious, but just again, kind of setting yourself apart from other buyers agents who might not be like getting on the phone and asking questions. So,
Though I have to say that I wrote twice this weekend, and both times, of course, I called the listing agent and asked if we could do an escalation clause. And they both said, I'm sorry, I don't like them. I don't know how to use them well. And so, no, you can't use them.
Yeah, that's perfect.
just-
Well, then, highest
That's
and
just
best
fear.
then.
Yeah. But I was just like, really?
I'm with you, Annie. I love escalators. I mean, they can be a wonderful tool to make sure that your buyer gets the best deal possible, kind of without going all in from the start. So frustrating when there's people that are leery of them or unfamiliar with how they work, because they are a great tool.
Well, and it's frustrating that it's the agent
Yeah.
that doesn't know how to use them, and their buyer or their seller is missing out on more income possibilities.
Mhm.
Or it might even be a smoother, better transaction, but they went with the higher offer that might have more contingencies because they're getting $2,000 more or whatever that is.
Yeah.
So frustrating. I mean, I wish there was, I was going to say this earlier, but I wish there was a magic wand we could kind of wave to make our offer stand out more. There's obviously some creative things, but there's only so much we can do. It's hard out there. It's tough. I had 3 buyers right on the same home this weekend in Delafield, and I don't think any of them got it. So it is tough right now to be a buyer and to be a buyer's agent. But if we keep our heads down and we keep, grinding and doing what we can and doing our very best, then we'll prevail. I'm certain of that.
And letters still work. I
Yeah,
mean, I'm
I've
sure
met
they're going
plenty
to
of
be
people that hate
outlawed
the letters
soon,
too.
but they work.
Yeah, very much so. I mean, I'm kind of done with like the benefits and what everything goes over. I do have a last slide because I always get realtors that ask me questions about how bridge loans or how they work. So I kind of always put this at the end in case you guys have questions about bridge loans, how they work, how people qualify. I'm here to help you educate, understand, or get an idea. Um, I'll kind of start with when you have a bridge loan. There's a difference between a bridge loan and not having a home sale contingency, because you might have a buyer or a seller that can afford both mortgages, but they can't afford that payment for the bridge loan. When an underwriter is approving somebody to not have a home sale contingency and to have a bridge loan, they are looking at the situation as if they're going to have all 3 for the entire time they have their new purchase loan, and they're approving them as such. So that's kind of what, as lenders, we're dealing with or trying to work around to make sure that there are definitely buyers out there that qualify for no home sale contingency, having 2 homes, but may not qualify for a bridge loan.
I'm sorry, what was the third? You said all 3.
Okay, so their current home mortgage, if they have one, their new home mortgage, and then the bridge loan for the down payment on the new home. So sometimes they can qualify for 2 of the 3. Does that make sense to you?
Yeah, because I actually I deal a lot with seniors, and so I work with a lot of bridge loan stuff.
Sure, sure. Yeah, and that can sometimes seniors on fixed income can be, very challenging in some of those aspects. But you can always use, I mean, we have a bevy of tools, right? As lenders, we can use depreciating assets if they've got retirements. They don't even have to be pulling from it. They just have to be of age. Pensions, annuities, any stock bonds, things like that as depreciating assets to help up their income and qualify them.
And how long do you ask people to hold the bridge loan?
Most of them are like there's different options, right? There's usually 6, 12, or 18-month options.
6 months
Depending.
is the smallest.
Yeah, correct. No, but that doesn't mean they can't pay it off early. There is no early prepayment penalty. Most of
So,
the requirements that are, because we're brokers, that our lenders have, is that if they're using a bridge loan, all they really care about is that they use the same, like our same investor for their purchase. So they almost do the bridge loan as a courtesy.
okay, but they could pay it off in 1 month with you guys.
They could, yeah. I mean, I can't tell you how many times that I've had instances where you go through, you get the bridge loan, and then, a good realtor like you, Annie, you've got the house sold and you're closing simultaneously and they don't even need it.
Okay, great,
It happens all the time.
good, because I've got a couple lenders that insist that it's be held for 6 months.
No, no.
Okay, good to know.
Any other questions, guys? Well, I had fun teaching you guys all up. I know it's not always fun writing offers with finance contingencies, but it is exciting to get new homeowners into their first home or their second home or whatever it is when they don't have cash.
Jake, do you want to stop your share and we'll just move to, perfect. Yeah, let's open it up. Do you guys have any other questions? Any other comments?
I do, if you can. What are the suggestion for buyer agency contracts right now? Before it was, that you're paid 2.4% or whatever is listed in MLS. What is the suggestion of what is written in that field?
I would now not put or as stated in MLS.
That's what I thought.
I
And I'm
just, yeah, no, that's, I mean, your line of thinking is absolutely spot on. I mean, and we'll have further discussions. I mean, that conversation is going to be continuing, of course. But right now, I think, I think a good script is, the commission is 2.4%. 9 times out of 10, you are going to be, my commission, the firm's commission will be covered by the seller or the listing firm, I should say. In instances where this 2.4% compensation might be lowered in the MLS to maybe 2%, then I could be coming and asking you for the 4% difference, 0.4% difference. If it's the case where it's 0% offered compensation, I don't know if you want to state this ahead of time. I mean, it's your prerogative, really, and we let you guys choose this. But, if you want to have a discussion where you find a home that you really like and it's 0% commission and you cannot afford to pay me personally, or the firm, I should say, then, it's a conversation about releasing you to an attorney or referring you to an attorney to write it. But this is where we have, conversations on our value and why, an attorney would not necessarily help you in this case because they're not speaking to the market. They can draft an offer, but they can't give you advice the way that I can, right?
And so I have no problem with the conversation. I was just wondering if there was any verbiage that that was being recommended or used that was something like 2.4% or
I would
something
just
based
I
on
would
the
leave it at
individual.
I would leave it at 2.4% and just keep it
Okay.
that
Okay.
way. Yeah, and I
That
should put that reminder because I need to talk to our other compliance, to Kimmy and to Joan about this in terms of, I think we've already have it. It used to be crash printed in the buyer agency contract, 2.4% are as stated in MLS, and I think we need to remove that. So, I mean, we should be removing it anyway, so that when we're having conversations with our buyers, because really the main point here is to make sure that like everyone understands that this is all negotiable and, we're being transparent, not pre-filling it in, so, so yeah.
Okay. All right. Just
Thank you
thank
for
you.
that. Thank you for that comment. Yeah. Anything else, you guys?
For Jake, are there any differences in some of the things you mentioned when dealing with multi-units, duplexes, 4 units? Are the loan terms and all of those things you can do the same?
You can do the similar things for sure. I know the problem there is you're running up to way more. I feel like far more cash buyers on investment properties than you are on single family homes. So I know that can be a challenge because you're competing with other investors. But it can be especially difficult to. Sorry, I've got a dog nudging my leg to compete in investment homes, at duplexes, quadplexes, whatever, especially if you've got a buyer who can only write FHA or something like that. But all those same tactics can work if they've got the funds and tools available to do it.
Awesome. Good question, Leah. All right. Well, use Jake at Epic or any other local lender, I think is the biggest takeaway here.
You're too sweet. I think the biggest takeaway is just avoid Rocket Mortgage. I can't tell
Yes.
you how many horror stories I've heard from that. But there's a lot of wonderful local lenders. I'd love to get a shot from you guys, but just keep supporting the local ones if you can.
And that's not why we had Jake here personally, but yes, just using local lender. And okay, thank you again, Jake, because I know you were coming in hot. He was on a plane this morning and was still able to provide this training for us. So next week, I believe we are going to do right to cure and the real estate condition report. So definitely come for next week's training as well. All right. Thank you guys. Have a great afternoon.
Thank you.
Thanks, Steph.
Thank you.